Okay, so hello and welcome to this short Q&A. Could you introduce yourself to start off and tell us a little bit about yourself and the experience in the M&A sector?
Hello, Evie. Yeah, thanks a lot. So my name is Augustin, and I've been working in M&A for the past 6-7 years now in France and in Singapore, where I've been working for two investment boutiques, advising tech entrepreneurs on seed, Series A and Series B deals from 2 to 15 million euros approximately. And I've supported 20 entrepreneurs, 20 companies for a total raise of 60 million.
Referring to your experience with seed and Series A round funding, what changes have you observed in seed and Series A round funding during the past 2 years? Why do you think these changes have occurred?
To me, seed rounds have changed a lot in the past 2 years. Just to give you a bit of insight, before that, 5 years ago, everyone was saying, at least in France, we are lacking of growth funds, and we're not capable of investing French funds for companies that are raising more than 30, 40, 50 million euros. And so I would say all the investment companies turned out and created funds to follow on at late stage. And this had a great impact on seed rounds, because for the last 2-3 years, we can see that there is most of the funds is going towards those late stage, and we see actually the same amount of seed stage deals with the same amount of deals and the same amount invested. So basically, seed stage is carrying in a continuity, and it's not growing anymore. And this raises questions for the future of it. And to be frank, I wonder if we will see as many large deals in the future years if we don't have the seed rounds right now.
During your time as an investor, what was your focus?
So I worked in 2018 and 20 in Reflexion Capital. Reflexion Capital is a seed Series A investment fund focusing on tech companies that are close or near profitability or already profitable, and their focus is really to make sure that companies that are making few million euros in revenue now and that are profitable will be able to grow to 10 or 15 million euros in revenue, still being profitable. And at that point in time, they will be capable of choosing between being acquired by a corporate, if maybe going through an IPO, but in France it's very rare, or going to an LBO fund to be acquired by this fund. And this opens up the horizons, the possibilities of acquisition, and it means better valuation and better liquidity for the investment fund. So it's a win-win stance. And at the same time, we see more and more companies that are trying to develop themselves being bootstrapped, because they're a bit reluctant of getting funds from VCs, and they don't want to be the lottery ticket within a VC portfolio.
During your time as an investor, what were the key criteria that helped you choose one company or the other? Were there different steps you took in order to get to know them and kind of figure that out?
So as an investor, you have a set of fixed criteria that you must be a match with as an entrepreneur when you apply to receive investment from this investor. So in my case, we would look at the growth, we would look at the maturity, we would look at the profitability, or at least the profitability horizon in the next 2 to 3 years. And those were really fixed criteria. Either you match or you don't. And if you don't, sorry, but it's not for us. If the deck or the teaser you send looks that there may be a fit, that I will organize a first call with the entrepreneur or a first meeting. In this meeting, what's important is to make sure those rigid criteria are effectively met. The second point is to check with the entrepreneur mentality, mindset, to to ensure the fit in the long term. And so we would organize a second call to discuss more in depth of the company, of what are the in and outs of the companies, its business model, its strategic positioning compared to competition. And from there, we would really analyze a potential investment, put ourselves in the mindset of, okay, this may be the good guy. How do we move forward? And moving forward, are there any red flags? Are there any questions that are still unaddressed? And we go, I would say, task by task within this list of questions. And if everything moves forward, then we would discuss on the financial terms of us coming in the company. If we could have an agreement on the general terms of a deal, then we would draft an LOI, a letter of intent, to write down the possibility of our investment and to start discussing, I would say, with hard numbers on what could be the future of the investment.
So it seems like there are many, many steps involved. So following up on that question, if you could give startups any advice, what would it be?
So be prepared. It's perfectly normal to take 1, 2, even sometimes 3 months before meeting any investors to make sure you have your narrative ready, to make sure you have all the documentation ready, to make sure you have a first answer to the Q&A that might be sent by any investor. You need to be fully prepared on, I would say, on hard matters, documentation, business plan, etc. But you also need to be prepared on the way you present, on the narrative, on the spin you give to your story. And this is something where the best things that you can do is to train over and over. And when you start presenting to actual investors with the objectives of striking a deal, you're fully ready and you can give your best game.
Great. Well, thanks for all your feedback.